What's up, traders? Anthony Crudele here, and in today's video, I'm going to explain why my target for this week is 44.98 in the E-mini S&P 500 futures. I'm here on TradingView. I'm going to be using the symbol ES1 exclamation mark. That's the E-mini S&P continuous contract. For those of you that are not familiar with the E-mini S&P futures, if you're a day trader, this is a product you should probably be taking a look at if you're trading SPY. Because the E-mini S&P futures, no pattern day trading rule, better for tax advantages, lots of benefits for using futures if you are a day trader. I'm actually going to be using options on futures as well for this position that I'll be talking about today. And there's also the micro E-mini S&P futures, which is symbol MES1 exclamation point here on TradingView. And that is just 1/10 the size of the E-mini S&P. So the E-mini S&P moves in quarter ticks. 4 ticks per handle, so it goes even, quarter, half, 75 even. It's 12.50 a tick. Same movement in the micro E-mini S&P, except it's 1/10 in contract value. So instead of 12.50 a tick, it's $1.25. So depending on your contract per risk per contract, you might want to use the micros, or like I said, options on futures, which is what I'm using specifically for in this position. I also want to mention that you can connect your TradeStation account to TradingView. And so for your futures positions, even stocks and crypto, you can connect right here to TradingView if you're a TradeStation user, which is always really nice. And like I mentioned, I'm using options on futures. And for those, you use what's called Futures Plus on TradeStation. You can learn more about all of this stuff at tradestation.com/Anthony. Also get a deal on your brokerage fees, 50% off for those that go and sign up to TradeStation at tradestation.com/Anthony. So here we are at the charts. Pretty simple this week. When I look at everything here on my daily chart of the E-mini S&P, I talked about this in a tweet this morning, Monday morning. The stars align for this. And what I look for anytime I'm looking for a swing position, so this position for me is something that I bought into on the market open this morning, added in and out throughout the day, going to be using options on futures for the positions overnight. And for intraday, I'll be day trading to the long side. I just don't like to hold the futures overnight, so that's why I'm holding calls along the 4,500 ES 4,500 calls, September 1st expiration. Bought those at 4.25 for an average price. And we'll continue to look to trade those in and out of those. I actually bought some micro E-mini S&P options on futures that also expire in the September 1st closing date. And those I used the 44.60s. So I bought some 4,500s and I bought some 45.60s just to kind of trade around a core position. And what I'm looking at here and why I like this setup is because 3 stars aligned. First thing that I look at when you look here is a daily chart, Bollinger Bands, 20 period, 3 standard deviation. Okay, you can see here 20 period, 3 standard deviation. Source is OHLC4. Click OK there. I don't have the middle Bollinger Band in there. What I have actually is just a 5-day moving average. I love the 5-day moving average. Really helps me with my time frame, because really somebody actually asked me this on Twitter today, what's my average hold time for a swing? It's 2 to 3 days typically, and a lot of times I'll get these on Monday, Tuesday, or Wednesdays and closed out within that week. I typically don't hold stuff through the weekends, so 5-day moving average is perfect because that holds. It's within my longest hold time, which is 5 days, which for this week it might take until Friday to get there. And so once again, this just fits into my time frame. And so I really like it. Helps me manage risk, helps me just understand the 5-day trend. Also, you have my indicator here, Beacon. What is Beacon? I've done videos on this. You'll probably see some links down below in the YouTube description, or if you're watching this on TradingView, you'll see another link that I'll post that talks about my Beacon indicator. But just to keep it really simple, it's a indicator that goes on the outsides of the Bollinger Band. So you can see here, the red is the peak for resistance. The blue is support. That peak is support. And then you have another blue line, which you can't really see right here, which it comes in at 06 and a quarter, 44, 06 and a quarter. That's also support. Yellow is my neutral. Red is my other resistance. And these are basically Fibonacci's, but not your typical fibs. It's 30% in red, 50% in yellow, 70% in blue. And that's what I use for my support and resistance levels. Another thing that I'm going to add into this picture here is I'm going to take an anchored VWAP. And so what I'm going to do is I'm going to click in my toolbar here, and I just use an anchored VWAP. You can see that's highlighted right now. I'm going to click right here on the recent low. Okay, and when I click on that recent low, the reason why I put it there is because if you follow me on social media, on Twitter at Anthony Crudele, I put out a message saying this could be a significant low. The way that this low was made, right on the open, surge of volume, order flow to the sell side, came right off of it, right on a round number. Basically, it stopped on the dime at 43.50, turned off of it. I like that as a low. And then I said, watch for a couple things to happen. And those things have now happened. What I told everybody to watch for is watch the bottom of the Bollinger Band smooth out and start to come back in. Okay. And then watch the top Bollinger Band start to smooth out and come back in. Anytime Bollinger Bands are pointing in, it's a mean reversion look. This is a mean reversion trade. The primary trade is still up, which I love. But this, for the short term, is a mean reversion trade. Why do I say that? Because the trend has been down, right? If the trend's been down and the Bollinger Bands were opening, we were expanding the range to the downside. But once those Bollinger Bands started to smooth out and come back in, it's mean reversion back into the mean. And so what I love about this setup, this is actually probably one of my favorite setups. And the reason why I say this is because you have primary trend up. Then you also have a look against a short-term trend, which has been down, that's bullish. And so when everyone says buy the dip, in the primary trend, well, how do you know when to do that? And this is what I look for. Bollinger Bands open, stay below the 5-day moving average, grind lower, regain the 5-day moving average, market stabilizes, tests the low a little bit, which it has over the last several sessions. Bollinger Bands come in, and boom, my beacon indicator draws my support and resistance lines. We start holding above the 5-day moving average. Super, super simple. And then I really have a point of interest to me that if it fails to hold, I know I'm wrong. Right now, the auto anchored VWAP comes in at 44.09.5. And so that moved up just below today's low. You have 44.06 and a quarter, my 70% blue line on beacon. The 5-day moving average is 44.20 and a quarter. So from 44.20 and a quarter to 44.06 and a quarter, relatively tight range. That's my risk price. That's it. This is also why I like to use options on futures for this, because I can step in, buy some out of the money calls in the E-mini S&P, even the micros. Okay, I can buy them 5 days out like I did. Expiration, I'm looking for end of the week, looking to cover these by Friday. And you can even buy them a little further out if you want a little bit more time. I like to typically do it on that Friday expiration or even go into early of the following week. In intraday, I'll trade the futures. And I'll trade directionally during the day, but I don't have to worry about holding it overnight. So today I was in and out trading futures to the long side. Not the cleanest day, but nonetheless worked out pretty good. A lot of the rally was really made at the end of the day near the close. But once again, you trade around a core position of sitting in the options market forces me to be really picky intraday if I don't get some clean looks to the long side. And so I get to participate in the rally, but also at the same time, be able to not have to force myself to sit in and hold futures. And especially the way today was, as whippy as it was, it's hard. And it's not easy just to hold the futures position that long. I didn't really do too much there. I mostly just tried to manage my options position and try to buy into the options market, buy some calls on the dips. And like I said, the target is 44.98. Not looking for anything crazy here, really just to go back to this recent high. If you look at this recent high, comes in at 44.85 half. They can go up there and potentially take out, run some stops up in there. I don't think 44.98, 4,500, let's call it, in the E-mini S&P is out of reach. I also put in my morning note on my website, every Monday I put out a tip of the week, or I put out my thoughts for the week. It's free. And you can go there and just subscribe at anthonycrudele.com. And I talked about how the end of the month, this month, I think could bring a rally because when you have the month of August, which has been as weak as it has been, really just a back and forth month, bulls, bears fighting a lot, but overall weak. I think NASDAQ got down maybe 5% and S&P was maybe 3%, whatever the numbers are, right? A lot of times I like to get long towards the end of the month in a weak month in a bull market. And so that also fits into what I'm looking at. And so those are all of the things that I'm looking at. You know, it's a puzzle. You like to put things together. I like to have confirmation, 5-day moving average, auto anchored VWAP off the low, Bollinger Bands coming back in, beacon indicator giving me my areas of support and resistance. And the most important thing, which I didn't mention, is I know I'm wrong with a daily close below 44.06 and a quarter. If we get below that VWAP, that 5-day moving average, my beacon support line, I'm out. I'm done. I'm wrong. But this is why I do it two ways as well. Intraday futures, hold the position with the options on futures. Allows me to be small and hold for potentially, a bigger move with the options. And intraday, I could be smart. If the day sets up as a bearish day, I don't have to step in and trade. I've got a position on an option. So that's what I'm looking at in the futures markets. You could always find more of what I'm doing at anthonycrudele.com. Got a bunch of cool stuff, free stuff there. So that's it for this video. Trade well, everybody, and have a great week.